Hi, everybody. It's FIBO Group, and you are watching to the Market Watch Review. The only major market in the Asia-Pacific region to have advanced today was the Chinese Bourses. Europe's Stoxx 600 has now recouped approximately half of the 0.6% loss last week. The U.S. equity futures are slightly mixed. The dollar is generally more flexible. The G10 currencies have the weakest yen. Support for gold is found ahead of $1,850, which was its lowest in just over a month. March WTI consolidates within the pre-weekend range. Tomorrow, OPEC will release its monthly report. The IEA will follow on Wednesday. Asian Pacific market. Markets are still struggling to understand the significance of the pre-weekend news about Bank of Japan Deputy Governor Amamiya declining the promotion. Former Deputy Governor Ueda will officially get the nod tomorrow. Separately, Japan reports fourth quarter GDP tomorrow. After a contraction of 0.8% at an annualized rate, it appears to have rebounded. After a brief dip below JPY 130, the dollar recovered to close at 131.35. Initial slippage by the Australian dollar was extended to $0.6890, before rebounding to 0.6940. Market of Europe. The Berlin election was driven by local politics. However, the elections in Lombardy, Italy, are being seen as a referendum about the right of center national government. Voting began yesterday and continues today. The euro was trading poorly before the weekend, and it climbed marginally to $1.06555. The euro has retreated, but it is not significantly different today. It is possible to cap the upticks by purchasing large options, which expire at $1.07 tomorrow and today. Sterling trades with a stronger bias. It closed last week at $1.2060, but has not been able to rise significantly above $1.2070 today. Market of America. The U.S. updated the CPI basket weights ahead of the weekend. It showed less deceleration for the fourth quarter of 2022 than the previous basket. This is a technocratic exercise, and it is not about the preferences or policies of the Federal Reserve or the Biden administration. The non-farm payrolls surge reported on February 3 helped to drive the adjustment in U.S. rate expectations, which in turn helped fuel one of the largest jumps in the U.S. dollar since last September and October. Canada released its own harrowing employment report before the weekend. It created 10x the number of jobs predicted by Bloomberg's survey project. In response to strong Canadian employment data, the U.S. dollar experienced an outside decline against the Canadian dollar. The greenback rose to CAD 1.3380 today, despite there being no follow-through sales. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.